What's up, everyone? It's your boy Looney back with another market breakdown. Today, we're asking a big question. Is this the real beginning of the next bull run or just another trap to wipe out the bulls? Quick shout out to the Discord, free to join. And if you want real-time trade alerts, strategy breakdowns, and exclusive giveaways, there's a premium version too. All links are in the description. Let's get into it. Let's start with what we're seeing in the markets right now. Stocks have been doing pretty good. If you look at my portfolio, I am up 4% on the day. Let's just take a look at the reasons why. So I have some option plays that is up 5%. And then if we move over to stocks and ETFs, actually, let's go to crypto next, up 3%. And then if we go to my stocks and ETFs, up about 6%. I had Mara almost up 20%. It was up a whopping 18%. So really good with Mara and my other stocks and my entire portfolio. Bitcoin, which revolves a lot around my portfolio, is up to 87K or 0.87%. Ethereum is still sitting at that 2K mark, I believe. Yeah, it's still at that 2K. So not really much movement with Ethereum. Today up 3%. And now, is this rally or is it a mini pump is really the question. Is this the start of the next breakout? But here's the real question. Is this actually momentum or is it just a fake out designed to trap bulls? So people or the retail is flooding in right now. We're seeing the longs come in. We're also seeing a lot of sentiment change. A lot of people are calling bullish, and this is exciting. If we look at the VIX, if I wanted to do a quick look at the VIX, it is down to $17, which monitors volatility. So it's starting to go downwards, which actually is concerning as an investor because this is when you want to be greedy, is when it starts going downwards and under that $15 mark. But as of now, I'm kind of in the middle. I'm not really putting too much money in and I'm not really taking too much money out. I'm just kind of sitting and letting things play out because both sides, I do see a case for the bulls and the bears. And one of the biggest headlines right now is the revisit of U.S. tariffs, especially from the Trump admin. So we're going to talk about how there's new tariffs going on with Canada and other countries starting April 2nd, and they revisited these tariffs, essentially removing them or not making them as harsh. So the market reacted to this, and that's partially why the market reacted to this, and which is just good sentiment. We're going to have inflation news soon. So does this signal economic slowdown of fears? Or investors, are they just brushing it off as temporary noise? Initially, the market reacted poorly to these tariffs, and then especially like the tech and crypto market. And then as we got more information of how these tariffs are going to do and the interest rate or the FOMC meeting, that we found out this is not as much of a concern as we initially thought. And now a lot of the tech market or the tech stocks are actually doing really well. We saw Tesla doing really good today. Let me pull up Tesla. And I recently got back into Tesla. I stopped investing into it for a while because I thought it was a little overvalued. And I started into recently, and it was a very good decision to make that choice. And it's up 12% today. So really good. SoFi also doing really good. And a lot of the other stocks doing really good. I saw a post from Unusual Whales that there was about $1 trillion into the market today. So liquidity is looking good on that end. And that's what I want to talk about now. And that's the M2 money supply. When M2 is rising, that means more cash is circulating. Sometimes this fuels a bull run, but if growth doesn't match it, we could see bubbles or liquidity traps. So this could explain part of the pump, but also part of the risk. And M2, I've seen a lot of other YouTubers I've seen mention this and other analysis use it. And it measures the total amount of liquid money circulating the economy. As of 2025 of January, it is currently at 21.6 trillion, which continues its gradual upward trend. And like I said before, increases M2 can indicate higher liquidity, potentially fueling asset price inflation. However, if this liquidity doesn't correspond with economic growth, meaning we're putting too much money in, but we're not seeing results, it could lead to asset bubbles and increase market volatility. Now, where do I stand? Personally, I am in the middle. I am simply holding. I'm dollar cost averaging in. I put money in every day into Bitcoin and other investments like SoFi and, not SoFi, like Sony. And I'm simply just holding. I'm buying the highs. Well, I guess these are the highs. Really, they're just the revisits or the retests of before. And I'm just buying every day. I'm not selling off too much. I'm not buying too much because I'm just playing from the sidelines. If I see opportunities, I will go more in. And if I see very euphoric styles or euphoric moments, I will look to take some profits. It's okay to take profits and miss out on potential massive gains. You always want to have that. You always want to have a goal. And I always have a goal, but I always like to bring that goal down just a little bit, there's a little bit of a reality check. And although I want to hit 50K, I know that it's possible I don't hit 50K. So I'm okay with taking profits before that and just being comfortable of missing out. But my strategy hasn't really changed overall. I sell puts on stocks I want, like Mara, SoFi. Actually, SoFi is above a lot of my put prices, so I might not get acquired on a lot of these, which is a blessing, but also I wanted to get acquired. I actually like SoFi, and I was hoping to get acquired, and even at that $13 one, it is above. So I'm doing that. I think I have really just SoFi are the puts. I think I have a Neo put, but I have credit spreads that I have going on. And then I have a lot of calls. I have a lot of covered calls on Riot and Mara with differing expirations just to diversify. You could diversify with stocks and other ways and different sectors, but you could also diversify with different expiration dates. That also minimizes risk because you're able to time things and just react to certain movements. And that's exactly what I'm doing. I'm putting some that are short term, some that are medium term, and just collecting premiums on both sides. And lastly, which is what I'm doing overall, and that's dollar cost averaging into long-term positions. SoFi, Hood, I recently have started to dollar cost average, and I'm hoping to build a position in that. SoFi, which doesn't get talked enough around the market and just the overall scene of investing, doesn't really get talked a lot, and it's doing really good. And during the pullback, it didn't seem much of a pullback. Yes, it did drop like the other stocks, but really good stock. I'm putting $5 a day, and if I see it drop even more, I'll put a little bit more. But as of now, that is my average, my dollar cost averaging, $5 a day, and hopefully I get 100 shares and do some covered call. But the best thing you can do right now is to not get emotional and not get FOMO because things are just going up, because we know very recently that things can come crashing down just as fast. So stick to your plan and let me know in the comments, are you buying this pump or are you waiting for another drop? Like, subscribe, and don't forget to join the Discord for real-time trade alerts and market convos. Until next time, peace.